Grand Rising traders, welcome to another Wake and Bake session with the Dark Sage. Do a quick recap of the post I did on the 17th, where I told you that after BlackRock had gotten its ETF approval, it promptly decided to go out and purchase 11,500 Bitcoin at a price of $490 million. Link to that article is below in the description. So that tells me volumes. They got approved. They decided after the approval and the market went bearish, now's a great time to pick up 11,500 Bitcoin. Not a bad idea if you're in their position. So, back to the nature at hand. When last we spoke, this consolidation box right here formed along with this consolidation line. I told you that it was going to retest that line and that when it eventually broke out, it would break out to the bearish side. So what we have going on right now is we are back into a channel. However, it's a channel between 100% retracement, the new one here, and the old one here. That's what's causing this this rejection at this level. This is where the old Fibonacci retracement line was. I mean, it's not exactly at the exact spot, but it's, I mean, maybe a hair off. Like this was below it when it, before I changed it, this was just like slightly below it. So this is probably hitting it. I didn't mark it while it was the old retracement level before I moved it. I saw no need in that at the time because when I moved it, the price was still going down. It hadn't bounced off of here yet. At least I don't think it had. And if it had, I don't believe it had. Or maybe, yeah, that's what it was. It was about to bounce back up and retest the old 100. And then somewhere in the night, I moved it. Anyway, that's where we are right now. We're back channel trading. We will most likely retest this old retracement level one more time. We seem to be getting a little bit of support down here at the 100%. That's what I said it was going to do, that the 100% would catch it if it broke out. It did not catch it, so we had to readjust. So now the 100% is down here at the lowest level. The swing high stayed the same, and the swing low dropped down here as shown by the low point here, and that's the swing high up there where you see high. So the high and low on my chart is actually the swing high and swing low of the Fibonacci lines. And so we're going to continue to channel trade until we break through the new 100% level and then drop back down before or below the 40K trigger point here. It's like, don't get shocked, don't get surprised. And once we drop back, this is an old, super old consolidation line. These are old consolidation lines and old Fibonacci lines that I didn't erase when the price moved above 40K. So expect us to drop on down, hit the 40K mark, maybe get a bounce here, maybe, not sure. It's going to depend a lot on what volume is doing at the time when it hits 40K, but I do believe that, yeah, we're going to go ahead and hit 40K either sometime today or over the weekend. It's going to continue in this bearish pattern right now, even though we're finding a little bit of support down at the 100% retracement level, which is basically 40,600 right there. We're finding a support level. So we'll see how that goes. Like I said, I believe it's going to break through that support level and go down and at least touch the 40K trigger point, where we may get a bounce. We may get a bounce. It depends on whether or not people are willing to fight for that level. At this point in time, I can't say that they are, can't say that they're not. Can neither confirm nor deny. So we are waiting to see if we're going to crash through the trigger point. If we do crash through the trigger point, it's going to set off like maybe a 3-4 hour run to the bearish side. If we bounce, it'll set off a 2-3-4 hour run to the bullish side, or it will go sideways for those several hours above 40K trigger point. If it does that, it'll then break low once more. If it hits here, if it hits the 40K and goes sideways, you can expect it to break below the 40K after that. We are once again going into accumulation mode. This is why we're in a bear market right now. Understand that. This is where you should start DCAing in again. That's dollar cost averaging for you that didn't know. So, this is where I'm going to wrap it up, guys. You guys have a blessed day. And as always, peace. This is the Dark Sage signing out.